would start by saying that part of the deal when you're an economist at the Federal Reserve Board is that you have time to do your own research. And I think the paper you're referring to, if it's the one I'm thinking of, was the research of 3 or 4 individuals, and it doesn't represent a position of the board. It's just someone's research, and so I don't associate that with a position of the board. More broadly, as I discussed earlier, we don't have a model of the effect of these tax bills. That's just not something that we do. We will incorporate, when it's done, fiscal changes that are made. They'll be one of many factors.
Well, let me refine my question. So what I'm asking is not a trick question. So what I'm asking very simply is, do you think it's good or bad for the economy if middle-class families were to lose $59 billion in household income year after year?
Well, that I think is an easy one, and yes, I think it would be bad.
All right. Now, what also do you view are the economic risks, both at a household and macro level, if we would add an additional $1.5 trillion in debt?
Again, without commenting on any particular bill, like all of us, I'm concerned about the sustainability of our fiscal path in the long run, and it's something that needs to be attended to over time. Very concerned about that.
But it would be a negative consequence to further add to the debt which already exists.
I think we need to be concerned with fiscal sustainability over the long term.
Now, in a speech you gave in June, you said with regards to monetary policy, and I quote, "The problems that some commentators predicted have not come to pass. Accommodative policy did not generate high inflation or expensive credit growth. Rather, it helped to restore full employment and return inflation closer to the 2% goal." That's not a study. That's your comments.
That's right.
So can you explain how, in your view, the Fed's monetary policy stance over the last 5 years helped contribute to economic expansion, and how will this inform your approach to monetary policy decisions going forward?
Yes, thank you, Senator. So, I think the Fed remained committed after the financial crisis to provide significant accommodation to the economy as it recovered. When I joined in 2012, which is about 5 years ago, I think unemployment was still above 8%. And I think we've been patient in removing accommodation, and I think that patience has served us well. I think now the economy is strong, unemployment is low, growth is strong. In fact, it appears to have even picked up, and so it's time for us to be normalizing interest rates and the size of the balance sheet as well. So but I do think that policy that we've had in place has generally served us well.
Okay.
Serve the country well, rather.
Let me ask you this finally. As you know, healthcare accounts for nearly 20% of U.S. GDP, including not only the delivery of life-saving, life-enhancing health services, but also fueling innovations in patient care, diagnostic, preventative health, research and development of cures to diseases. Earlier this year, I asked Chair Yellen about the impacts, both at a household and macro level, of a spike in the number of uninsured Americans. And she said that large-scale loss of access to health insurance could have a significant impact on household spending for goods and services, as well as impact job mobility. Do you agree with her assessment?
I think she was referring to some research, and if Chair Yellen was referring to research, we can be pretty confident that she was accurately reflecting what that research said. That sounds right to me.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.